Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. So let's start with some small fundamental stuff, mosey our way into some TA stuff. One good metric to watch is active addresses on BTC and ETH. These are addresses that have moved in value over the previous day or haven't moved in value over the previous day. It's something a lot of the legacy people pay attention to. So again, even if you don't value it highly as a metric worth trading off of, I can tell you there are a lot of people who see this as a pure way to look at on-chain strength. So nothing too exciting, BTC in the red, ETH in the purple here. Anything above 1 million on the weekly average is definitely unusual in a good way for BTC. Anything above 400K for ETH would be basically never historically, other than, January 2018 and a few other minor times recently at the end of March. But in general, we've been below 400K. So BTC above 1 million, ETH above 400K. Those would be levels to watch for me. If we're building our narrative, if we're building our bullish story, if we're building our bearish story, if we're trying to figure out, do I go long? How much do I go long? What is my leverage? Does this have any strength? Is there divergence between fundamentals and technicals? So you kind of need the whole picture. So if daily active addresses start popping off and price is going nowhere, to me, that says we haven't priced in the on-chain activity, and I'd expect some bullishness coming. So not the picture we have here. This is just flat. Nothing really to say unremarkable. Another thing to watch is Bitcoin difficulty for hash rate. So it's been -6 the past 2 adjustments. Nothing too crazy. You can see historically it's just been mostly positive. Even with -2 or -6%, 2 adjustments in a row, it's still less than 16%, which it was on March 25th after that drop on the 21st. So all in all, after having, I think we're doing fine, especially with block reward, decreasing mining profitability significantly. Looking at MVRV, market cap minus realized cap, divided by the standard deviation of market cap, which gives you this Z-score. Really, all you need to know is, do we have the potential for up? Are we on our way to zero? Where do we sit historically? These are the things I won't look for. So historically, anything below zero was the buy zone. We've dipped into that on March 12th, and now we've begun our ascent into the stratosphere, hopefully at above 7.5, 8, etc. All of these values correspond with all-time highs. Something to watch, certainly, especially for the people who love to say, in 2017, you didn't predict X, Y, and Z, or nobody can predict that this is the top, blah, blah, blah. This is just something to watch. Add it to your tool belt when you're looking for confluence. Let's say Euphoria's infinity and MVRV's at 8.5. Maybe it's a good time to start closing your long positions. Just a suggestion. Looking at the Puel multiple, which is related to coin issuance. Again, after having, we dropped down way down deep, historically, definitely where you'd like to see it. And it's since pulled its way back up post-halving. So again, this says our ascent, just like MVRV, is pretty wide here. We got a wide berth coming. Anything above 4 is basically been an all-time high in price. Something to consider. Again, just like MVRV, all this stuff should sort of tell you the same thing if you're looking at on-chain fundamentals. As far as the log growth curve goes, my probably preferred variation of the pitchfork at this point, just because it probably makes more sense. Again, it's hit all these highs. Right now it's pointing a high to 60 plus, almost 70 plus. Sounds crazy, it always does. We'll see what happens when we get there. The median line is around 25, so that would be my expectation on the way up. Even if we're not mega bull for multiple months, I think there's a pretty high expectation that that's going to be the target in the near term over the next, 6 months? Happy June. Over the next 6 months. By the end of the year, 25, 24, is certainly a reasonable expectation based on that. This is the 2-year MA multiplier, so it takes the 730, which is the green here, times 5, and it gives you sort of an oscillator. It's the red up here. So price likes to live in the middle, and it tells you when it's oversold or overbought above or below these levels. So again, we dipped below the 2-year MA, which was buy territory. We're now above it, upside pointing to 35, 36, something like that. One way to play these as well is you wait to buy until we're above the 2-year MA. You wait to sell until we're 5 times below the 2-year MA. So these are kind of levels to watch, definitely, that aren't subjective. They get your head out of the euphoria and say, once we're this high, especially super quickly, I don't think we're going to get there quick enough to not adjust the MAs. So if this is a multi-month thing, these MAs are going to just start turning up. So theoretically, the level is even higher, but just something to consider. Switching gears, this is gold, this is silver. It's always good to, again, just watch as much stuff as you can without getting analysis paralysis and information overload, because all this stuff is connected. So gold's been on this tear ever since the beginning of the year, even 2019. The issue is I'm seeing a mega bear div on gold right now, regardless of what's happening around the world with crumbling nations, etc., etc. So no real reason that this would affect BTC, but worth paying attention to. Bear div here. Silver, on the other hand, looks very Wyckoffean, and anything above 1920 should begin markup or consolidation similar to 2014, 2015, how it had this multi-year consolidation, broke down, establishing a range. Now it's probably going to break up, establish some sort of consolidation, and continue the markup phase from there. This is the weekly, this is the daily, gold, silver. Looking at the VIX again, volatility index for legacy markets. VIX wants to go to 0. BTC likes it when VIX goes to 0. Buy opportunities have been spikes in VIX, which we saw on March 12th. So far the story has come true. The Cinderella story of buying the dip when VIX is above 35. So to see VIX continually dropping off, bullish for BTC. This is SPX correlation, and this is the NASDAQ correlation. If you're a true Bitcoiner, you want to see these both go to 0. Over time, they're certainly uncorrelated. Recently, they've been highly correlated. So it's good to see this finally go to 0, because that's what's happening here. We don't want these to be correlated. This is the futures prices relative to spot for BTC and for ETH. Again, something to pay attention to if a bull rally is coming or we are approaching a coil ending, consolidation period, beginning to move, that sort of thing. Since March 12th, the premium has been positive, it's been negative, it's been all over the place, especially for ETH. It's actually been mostly negative. So here's what I'd expect. I'd expect both of these to start trending higher and higher premiums if we're bullish, which is something you want to watch for. You also want to watch for premiums on futures for BTC, especially ETH on BitMEX, that sort of thing. Things to consider, especially if you're trading on those platforms. This is tether price above $1 or below $1. The interim hypothesis for the near term is if we're flipping bullish, tether's going to flip above $1, even though that doesn't necessarily make sense. The thought being that if we're bullish, then the demand for tether to buy crypto increases. I know it doesn't make that much sense, but that's the only way I can really rationalize this here. That'd be something to watch. Another thing to watch is, I should actually pop this on here, the USDCNY price. So if USDCNY breaks highs, it'd be interesting to see if tether pops above $1, because I bet it does. I bet it surges above $1 because people are looking to exit into USD as quick as they can. There's already stories about USD being unavailable in Hong Kong, for example, through foreign exchange. Physical foreign exchange on the ground there. So interesting situation. And along with the tether stuff, watch the Coinbase versus Bitfinex thing premium, or the lack thereof. So you'd expect Coinbase to be surging above Bitfinex if we're bullish. I just expect cash to be leading tether there. Historically, over the past 2 years, year and a half, anytime we've been really bullish, it's been Coinbase leading the way. Futures contracts, not too much to talk about. The next expiry is in June 26th. It looks like this December to June 26th will be an up contract. Again, these biannuals have been either down or up. They really haven't been in between other than this one. You can see we made a high and we made a lower low, but it looks like it'll end up as a up contract. There was an expiry the other day nothing really happened. I think it was one of the largest open interests that CME has had. So that's super interesting. Not expected at all. You expect shenanigans around these expiries in general. So to me, that's a good thing. All right, looking at the cloud for weekly BTC, first thing that pops out to me is this cloud basically getting ready to flip bullish again. Just as a comparison, this was the bearish flip, and this is when it flipped bearish. So this is a future cloud. It's telling you, get ready for a change in momentum. The winds of change are approaching. And typically, but not always, it's immediate. Here it was immediate, right? This was bearish, then we went below the cloud, then we fell off the table. So when we're in bearish territory, you look for shorts, you look to get out of your longs. The opposite is coming up now, where we're getting this bullish flip, not above the cloud yet. But there's this edge to edge thing to 11.5. There's all sorts of loosely bullish, not clearly bullish narratives on the weekly here. RSI is above 50, plenty of room for upside, just like all those fundamental metrics I talked about in the beginning. So I really like the look of the weekly. Worst case scenario is we drop to the Tenkin, which is at 7.1, a level that many people have been looking for, watching for over the past week or two. Hasn't really happened, obviously. Another thing to watch for is the TK cross to return bullish. This will happen slowly over time as long as we continue to move above the cloud or above the Kijun, the red line here. So weekly looks great. Daily looks like we're coiling again. ETH is coiling or getting out of its coil, and ETH BTC is coiling extremely hard. So all this is very bullish from a cloud perspective. If this keeps coiling, you'll see this lagging span, which I hardly ever talk about, this light green line. You'll see this lagging span move into price, which tells you to hold your horses on any positions, right? Because we're consolidating and it's obvious, and you don't need the lagging span for that. But one thing to watch, just like here, so we had this inverted head and shoulders, we popped up above the median or the neckline, right? But also what happened is the lagging span popped up above price. Similar here, we had this this head and shoulders consolidation that didn't actually pan out, and oh look, the lagging span popped up above price. So these are checks and balances for going long, going short, when to fire the trigger, that sort of thing. So if we start to pop above this consolidation, it's a no-brainer that's a breakout long entry signal. But I would also watch for this lagging span here. If we measure this out and if we pretend this is some sort of pennant or flag, the 1618 is at 11.3, and the measured move is basically 12.2. We have a yearly pivot at 12.9. So if this does happen, I don't think it happens, I don't think we move to 12.9 in one candle. What you want to see again is a slow trend. The TK lines are decently close together, not really a risk of mean reversion like we had earlier a couple weeks ago. So you want to see this cloud start to move up next. That would be the next thing to watch for, because again, this 7.1 area is decently positioned for a support test. That starts to go away once we, if this consolidation breaks up, then it says the support test is much less likely. Right now we're leaning heavily bullish. Continuation definitely expected. If this continuation fails, 7.1 is definitely the target. And just a couple sanity checks, 5200 bullish cross in May, heavily in the rear view at this point. 200 is around 8.1, not that far away from price. Says there's plenty of upside potential and expect bullish continuation based on that. This is the alligator and the pivot, alligator and the fractals. So the alligator is just 3 MAs, the 5, 8, and the 13. And when they look like this, they're bullish. When they look like this, they're bearish. And when they flip, that's when you change your bias. So they recently flipped. It's on the upside, upper half of this triangle consolidation thing. And it's telling you any horizontal breaks of these fractals will be a long entry. Again, a no-brainer. If you just look at this and know that this is you're getting lower highs, you're getting higher lows, it's a consolidation where you expect a breakout move if we go higher. So this fractal alligator thing is just echoing something most people already know intuitively anyway. Once again, this is that 7.1 area, 6.571. The issue with dropping this far is what's going to take us there. Like, The volume is now chunky, chunky, chunky. This is VPVR. So this is volume at price versus volume per day. And it's so chunky here. It's like chunky Campbell's soup. It's thick. So much volume here. So this is what you want to see. I read this as support. So there's support all the way here. There's no support here. There's lots of support at 3.9, right? Just because there's lots of volume on the way up, lots of volume in this consolidation. Similarly, there's very little resistance above 10, above 10.6, which again echoes this idea that if we're consolidating and we're patterning out here and we break above 10, there's room for upside. All right, switching gears to ETH. Been watching this ETH cloud for, I don't know, since January at least. Similar to the edge to edge on the weekly for BTC in 2015, 2016, 750 just keeps popping up for ETH as far as a level. It's the R5 pivot here. If we do start to move up, I expect resistance at 330 to 400 basically. Just looking at all these horizontal levels. It was a low here, it was a high here, it was a high here. So we're not going to shoot straight there, but leading into whatever ETH 2.0 phase 0 is going to be, I think we move up to the 300s, consolidate from there, and then if it's successful, move up even higher. This is all just rationale on the chart. Where my head's at on that. It's not in the cloud yet, and there's not a bullish TK cross, so definitely things to watch for in the next few weeks. But when it starts slamming against the cloud, that looks like a great edge-to-edge setup. ETH had this interesting head and shoulder, inverted head and shoulder, or ascending triangle type pattern. It's basically hit its measure move and 1618 at this point. This will probably further consolidate on a lower time frame. So if you move to the 4, 6, 8, 12 hour, there's going to be some sort of falling wedge or triangle pattern, bull pennant thing, most likely here. The cloud is bullish, that's what you want to see. TK line's pretty close, that's what you want to see. Again, it's printing this 190 level like the 7.1 area on BTC. So if we do drop to 7.1 on BTC, I'd expect 190 for ETH. These aren't expectations, these are just things to watch for if we flip bearish fast. Alternatively, we may retest this neckline, which is a popular thing to do after a pattern breakout. But in general, the expectation is massively bullish for this. I'd expect a retest of these highs more so than any downturn. Even 220 might be a lot to ask for. Again, just a sanity check. 5,200 bullish. Price isn't that far away from the 200. It's certainly farther away than BTC, but it's not that far away. And the fractal alligator thing is bullish. And this was your long entry signal on this breakout. Again, a no-brainer if you just know patterns, no basic horizontal levels, but it's just a nice sanity check there with a stop level below 195. And again, ETH BTC just really coiling here. It's hard to think that this is mega bullish. It leans bullish, I think, but knowing that BTC has the potential for 11 to 12 and ETH kind of already outperformed BTC, I don't know, that's just something in the back of my mind. It's difficult for me to want to long this pair without expecting us to go to 035. Like if I'm long this pair, that's what I'm waiting for, is a move back to these levels up here. You can also trade the breakout, anything above 025. So 025 to 035, pretty decent trade, obviously. Something to watch for. And then lastly, looking at Ripple, or looking at Stellar and Doge again. Stellar just continues to consolidate. Unlike its cousins, ADA, Link, Tezos, which have moved up pretty well, especially ADA. Stellar is kind of lagging behind a little bit. I still think it leans bullish as far as the consolidation goes. The 2-day cloud, extremely bullish for Stellar. Again, this breakout is the first since early 2018. Anything above 082 should see massive bullish continuation. Alternatively, if BTC drops to 7.1, if ETH drops to 190, XLM will drop to 055 minimum, this cloud level here. But again, there's a bullish expectation. And Doge BTC, lots and lots of sideways, hasn't really done anything since August 2019. If that, you could probably go back to May Maybe it's a year-long consolidation. Clearly the longest consolidation ever for Doge. I'm in no hurry to pull any money out of Doge. If it's holding your BTC levels, then it's actually gaining in USD value if BTC is going up. So, you're not really losing money there relatively regarding USD opportunity cost. That's all I have for this one. Like, dislike, comment, share, subscribe. Hit me up on Twitter, and happy trading.